Good morning, everyone. Welcome to day 2 of this year's Milken Institute Global Conference. For anyone in the room that I haven't met, and I think all my good friends, I see you all out there showed up at 9:30 in the morning for us. My name is Mindy Silverstein. I'm the Managing Director of the Milken Institute, and I want to welcome you to this panel, Investing in Growth, Accessing Global Capital, which is really core to the mission of the Milken Institute. As many of you know, our mission is around accessing capital, creating jobs, and advancing health. And we do that through both policy and economic solutions. We have a great panel today to talk about this. Starting down all the way to my right is Mark Cutis, the Chief Investment Officer, Special Situations of the Abu Dhabi Investment Council. Next we have Jay Ireland, President and CEO of GE Africa. His Excellency President Kagame. Sorry I didn't go to you first. I'm not very good at the protocol. It's been an honor for us to have President Kagame with us again this year, and so we're thrilled to have you. Seth Marin, the founder and CEO of LiquidNet, and all the way to my left is Ashish Thakkar, the founder and CEO of Mara Group and the Mara Foundation. So I'd like to start this discussion, which builds on many that we've been having, not just in the last few days, but for many years, thinking about where we are and the inflection point that we're currently at. If you want to bring up slide 2, this slide is one that Mike often shows, and you've probably seen shown by other colleagues or others throughout the conference, is we're at a point in time where developing economies have now have a larger share of global GDP than developed economies for the first time ever. And this compounded with, if you go to slide 6, looking at the global growth forecast, where they're seeing that growth is going to be in the next 5 to 10 years. You can see developing Asia, sub-Saharan Africa, which are obviously going to be key to the discussion on this panel, obviously leading the way here. And then the next point, as we look at slide 3, is the issue of cash on the sidelines. And this is something that we talk a lot about, and obviously this is related to Fed policy and the fact that many of our audience at the conference is probably 65% from the world of finance, many investors, many that are looking for yield so that they can pay pensions long into the future. And right now, if you're making very little money in US Treasuries, you do need to think more aggressively and look overseas and into developing markets. So with that, I'd like to first go to Seth Marin. Seth, after your first global conference, you came to me and said, you can't have all this capital and all these amazing people and this great platform and not be doing more to change the world. You guys are doing great things, but can we go a step further? And we had an idea called, the program now called the Access to Global Capital Initiative, that you've been our partner in initiating, that is in three countries. Rwanda is our first pilot country, which really leapt out in front. We're also working with Indonesia and Colombia. But Seth, why don't you talk a little bit about why the time is now for these markets?
So this is a purely capitalistic concept, which I think is absolutely necessary, and it's the only type that really, I think, works on a sustained model. And the goal here is twofold, really. One is to understand that historically, most investment is generally made in one's own backyard. So all of our pension plans and our mutual funds historically have invested about 70% of their money. If they're in the United States, in the United States. If they're in Australia, they're in Australia. After the global crisis, the world has really diverged. As you can see from one of those slides that Mindy just showed you, investing in your own backyard is not necessarily where the best returns are going to come from. So you have an amazing convergence right now where you need growth in opportunity, an investment opportunity, and you have an emerging areas, whether it's in Asia or it's in Africa, that is a valid and, in fact, more than valid opportunity for that investment. So you have a couple of regions that are just growing much faster than the developed regions. And you have, obviously, there's a risk-reward curve for that. But you have, at the same time, all of the metrics that are really important to investing in those regions going way up, whether it's education or whether it's good governance. And so we're really here to educate investors around the world as to the opportunities that are coming about in some of these areas. And not all the areas are equal, obviously. Africa is a continent of many countries. So we want to focus on those countries that are already exhibiting good governance. And what we want to do is we want to make case studies out of those countries. And the examples that we use over and over again is that 50 years ago, Singapore and Jamaica had the same GDP. And South Korea had less per capita GDP than Sudan, Congo, and Sierra Leone. Okay? And look at where they are 50 years later. And they didn't have any kind of roadmap, and they certainly weren't able to leverage the technology that we can leverage today. So the first step in all of this is really good governance, so that when we speak to the corporates out there, they want to make sure that when they invest in the long term that the rules of the game are not changed in the next election or a few years later. And you want to have rule of law, and you want to limit corruption. And there are excellent examples today where that is occurring. And one of the most excellent examples really is up here right on the stage with His Excellency President Kagame.
So Mark, I'd like to go to you next. I think that you have a different perspective sitting in the Gulf, and I think we talked a lot about what a frontier market is here, so different than the frontier when you're sitting in a different part of the world. So why don't you talk a little bit about your perspective?
So yeah, I think that's a very US-centric view, which is what's happening in the emerging markets. Where we sit in Abu Dhabi, it's 2 hours away is Tehran, an hour and a half is, let's see, Karachi, Baghdad is 1 hour. So that's sort of the world that we inhabit. Having said that, the bulk of our investments are still in the US and Europe. But that part of the world is growing. And if you're going to participate, you're not just going to make an allocation into an equity market because the equity markets are not that well developed. You're going to have to get involved in doing private projects. And in order to do these projects, you must identify the right partners. So, in a nutshell, that's what we spend a lot of time doing, identifying tomorrow's trades today. And for us, the low cash levels, or high cash levels rather, we take a long-term view, and we're not particularly fussed about what's going on today. So we expect the market to ebb and flow, but what we want to do is identify countries that over time will do well. And clearly the emerging markets in Africa in particular is going to do well.
Yeah. So if you go to slide 4, you can actually see the FDI flows by sovereign wealth funds. I think it's slide 4. This is a little bit of what you're talking about. We are starting to see more flows. It's coming back a bit, but I think there is still a long way to go in terms of the sovereign funds. And I know part of our idea and things that we build on is, just a few months ago in Norway, Bill Gates stood up and said to the Norwegian fund, you have to think about emerging in these markets, not just in equities, but also in infrastructure and things like that. So pivoting from that, if we could go to slide 3, this is part of our premise with thinking about the cash on balance sheets. So Jay, I'd love to go to you and ask you first to take a global perspective from GE and talk about sort of globally where you're thinking and prioritizing, and then maybe we can end in Africa.
Yeah, if you go to 6, actually, slide 6, that mirrors pretty much, when you look at our orders growth right now, kind of what we're seeing, except the percentages are a lot higher from a standpoint of year to year. So double digits up in the developing Asia, sub-Saharan Africa, Middle East, North Africa, and Latin America. And as a result, we've reoriented our organization to really put senior leaders in some of these areas to really push and take advantage of what this potential growth opportunity is. So from our perspective, we look at it in 2 ways. One is obviously we want to go in and develop projects and sell equipment. But the other thing that we need to do at the same point in time, especially in sub-Saharan Africa, and what we're doing is also developing what we can on the economic front, because a rising tide will lift all boats. So we're looking a lot at skills building, SME development, supply chain development. But on the other point, we're also investing up to $800 million in CapEx around 4 or 5 main projects of assembly manufacturing in Nigeria, Angola, South Africa, and Kenya, and Ghana. And so we're we're focusing a combination of capacity as well as project development. The other thing that's different for us in sub-Saharan Africa versus elsewhere, if you go back to that cash and how we're going to use some of it, is the ability to have to develop a project. So if you're in the developing world, or the developed world, it's very easy to go in, sell a turbine, an X-ray machine, an aircraft engine or whatever, and get paid by the customer, or you put them on credit or whatever. In sub-Saharan Africa, we've got to develop the project, help take the developers, work with the governments, and then really do, whether it's a power project, a rail project, et cetera. So we tend to invest some of that cash in development, in the development phase, to help bring in other potential investors as well. And so from our perspective, we plan on using a lot of that. Not that I speak for Jeff Immelt necessarily, but I'm trying to get my piece of that pie too. So, but on a different aspect. So.
Well, this is a nice segue. I mean, as we think about the opportunity in Africa, and I think this conference, there was a speech that his first speech on Wall Street where he said the best investor is a social scientist. And so this panel is really meant to be sort of the meeting of our world of finance and understanding what's happening in the world. So I'd like to go next to Ashish Thakkar. Ashish, your narrative really reflects the narrative of Africa, the diversity, challenges, and also a lot of optimism and promise. So why don't you tell us a little bit about your story?
Sure. Thank you, Mindy. So my family's been in Uganda since 1890, my father's family. My mother's family in Tanzania since 1920. And in 1972, the Idi Amin saga took place in Uganda. So my family was kicked out of Uganda. We moved to England, started again. Parents worked in factories, built it up from scratch. And in 93, we sold everything and moved to Rwanda. 9 months later, unfortunately, the genocide started, and me, my sister, and parents were refugees during that genocide. We came out okay, fortunately, but unfortunately, we lost everything we built from 72 to 93 in 94. And we moved to Uganda as a full circle and started from scratch. I then quit school and started my business with $5,000 in 96 and slowly built the group. And today, just to fast track, the Mara Group is headquartered in Dubai, but we're in 22 African countries. We have just under 11,000 employees in the group, and we're involved in financial services, technology, manufacturing, real estate, and hospitality. And I spend 20 days a month on the continent, every single month, and have been doing so for the last 17 and a half years. So firsthand, I can tell you that the perception versus reality is so different. What exists out there is so amazing. I mean, the continent is truly transforming. Our continent's biggest symbol of that and proof of that is Rwanda, with President Kagame's leadership, that truly what happened 20 years ago and where we are today as a country is unbelievable. And that reflects what's happening on the continent as a whole. There's so much happening in terms of, we have the most naturally rain-fed arable land in the world. We have only 7 to 8% financial penetration in the market. We have 52 cities with over 1 million people. We're physically larger as a continent than North America, Western Europe, India, and China put together. I mean, this is the future. And what's amazing is when you look at that chart of developing regions and where returns are very high, it's very interesting to note that the US still invests a lot in India and China. And India and China is investing a lot in Africa. So I mean, we are the final destination when it comes to good returns.
Thanks, Ashish. So, we spoke a little bit about the Access to Global Capital initiative, and through this initiative, we've had the opportunity to work very closely with President Kagame. And I've had the honor to be his guest in Rwanda. And I think, you know, as we sit here at the 20-year memorial of the genocide this month, and Rwanda recently was, I think it's 22nd, jumped 22 places in the Doing Business Index. I think it was the largest jump ever in the history of the index in 1 year. And I'm sure Claire Akamanzi is in the room, who's been our partner with RDB working on this, obviously with President Kagame under his leadership and many others in Rwanda. But you can see this jump here, which is, you know, really quite staggering when you look at the countries that, you know, we tried to baseline it against some other countries because we couldn't show the whole index. But it's pretty incredible when you see most of them making very little movement and that type of dramatic shift. So why don't you talk to us a little bit about why the time is now and sort of the climate?
Thank you. Rwanda's story is really an African story, and there are similarities across sub-Saharan Africa. And if you look at the growth rates of the last close to 10 years in Africa that have been consistently high, these rates, growth rates, are related to this story I'm talking about. We have Africa that is getting better and reflected in the economic growth that we see. Africa getting more integrated and also integrating itself in the international financial systems. But continually we see that the demand for financial capital is not met by the supply. So what we have done and continue to do in Africa with the continued integration is to make sure that we also build efficient systems across Africa. There are different countries, some doing better than others, but the aim is the same. It's to make sure that as we integrate, we have these nation states with better governance, and on this, I'm happy to talk about the partnership we have and with the American Institute, as well as the Tony Blair's African Governance Initiative. The aim really has been to build and strengthen our systems to the level they are efficient, to deliver not only for Rwanda, but we hope to share the best practices across the region of East Africa, Kenya, Uganda, Tanzania, Burundi, Rwanda, constituting 140 million people. We have been working together. We are developing infrastructure together. We sharing most of the things that you need and integrating even our capital markets that are still young, but developing. So integration is key to serve as many people on our continent as we can. In Rwanda, we are doing our part, as you have just mentioned. We looked at what is it that attracts investments, what is it that business people are looking for, where they want to go and invest, other than, of course, wanting good returns on their capital. They want to be doing business in places that are predictable, that reassure them of security and safety of people and their investments. So this is how we have been driving the processes forward. And I think, as one panelist has just said, looking at what we have today and then looking at long term, I think is key.
So, so I'd love to hear, Jay, I don't know if you want to talk a little bit about that, of the role of the multinational. We've talked certainly a lot about there are different things that come with the multinational. In this sense, I think people do look to you as a stamp of approval as they think about entrance into different markets. And Mark, we'll go to you in a second, because I think that's another version of that coming with other partnerships.
Well, I think, Ashish talked a little bit about it, which is this risk perception versus the risk reality. And it's a combination of, of governance, of governments. There's corruption issues and concerns that people have, as well as just the ease of doing business. And so as we look at the region, I live in Nairobi, and for the 3 years that I've lived there, we continue to see a tremendous improvement. I think there's a couple of key things in that. One is what President Kagame said, and that's looking at from a regional perspective. So if you look at the East African community, some of the stuff that they've done from a standpoint of coalescing into this regional structure, now for a company like ours, says we have 140 million market versus 40 in Kenya, 14 in Rwanda, et cetera. So for us, it's a big deal. So we can train, which we've done, we can train biomedical technicians in Rwanda and bring them to Kenya to work, or we can take interns from Carnegie Mellon, which has a campus in Kigali, and bring them into Kenya and Tanzania to basically do work without going through a lot of the visa processes, et cetera. So that's a big deal for us. And it's also going to be an aspect of how you go to market as well. You come into one market, boom, you pay the duties and stuff, but then you can transfer throughout. And those are all very, very important. So for us, it's a real aspect that's going to really change the dynamics, mostly for including other countries that may be smaller than some of the bigger ones in each region. Everybody goes to Nigeria, everybody goes to South Africa, and everybody goes to Kenya. Mm-hmm. And it's like there's a lot of population all around the others, but they add up when you put them together on a regional basis. So that's one. Two is, on the corruption front and ease of doing business, as we look at it, efficacy of government is a key thing. And the ability for the government to allow you as an investor and or a multinational come in to sell and go through a consistent process, transparent, that you understand and your investors understand to really get the projects done or the goods sold or whatever is absolutely key. And we have that from a standpoint of the countries that we look at. And then corruption is another one, and I mentioned this earlier in the week. Number one, there's corruption everywhere in the world. We operate in 160 countries. Corruption is also always a two-way street. You need an asker and a giver, and so, and I think if you're a company, you have your ethics and all, and people understand that, and you have to. We've walked away from deals. There are 48 countries in sub-Saharan Africa. We really operate in 22, and we really focus around 7 or 8, and a lot of that is that screen that we do of all of the factors that I just mentioned. So I think it's a way to do it, but the reason you know how to do it is that, we as GE couldn't have done that prior to me getting there, not because of me, but because now we have a much more senior team on the ground making calls, mm-hmm. versus just more sales-oriented guys that are out there trying to get orders and approaching it from a strategic standpoint.
Yeah. Mark, I don't know if you want to...
No, I just not much more to add, but you have to be on the ground, you have to be close. You can't be sitting effectively in California and trying to craft an Africa policy. I mean, if you look at it, she lives in Dubai. I think even living in London is too far away. Mm-hmm. If you want to live outside for other reasons, for the transportation hub that Dubai is famous for, you can live there because it's very close to Africa. But ideally, you need to be on the ground because only then can you forge the right relationships and identify the right partners. And that's actually what we spend most of our time doing, is identifying people who actually have as much or more at stake so that if there is a problem, they will be up at night worrying about it.
Just to piggyback on that quickly, we had part of my job over the last 3 years is to get our company, quite frankly, oriented to Africa and how we serve it. So when I first got there, we had a number of, and also other U.S. companies, and they, my IT guy called me up and said, "Hey, I'm your new IT guy." I said, "Really? Where are you located?" He goes, "London." I said, "Well, when you move down here, give me another call." And then, we'd talk to our sales guys, and they would be in some of the businesses. Now they've all moved since, but they'd be in London, and well, geez, it's only a 6 or 7 hour flight to Lagos. Yeah. And I go, "Okay, so you have an account in New York. Are you going to cover that from London?" "Well, no." I go, "Well, why is that applicable to Lagos?" Mm-hmm. And I think people have got to really understand that. And I've talked to other U.S. multinationals, and they all locate in London because you can get there overnight. But an overnight flight is still 7 to 9 hours. Yeah. And no one covers there and understands it if you're not there. So I think that's a key thing.
Well, so Ashish, maybe we could go to you and you could talk a little bit about operating in some of these markets and what are some of the conditions that governments are doing to make it better for operating?
I think one of the key things is when operating on the continent, and I think Jay has done a great job with this in GE as well, but using the whole thing of global partners need local partners, right? And local partners understand the ground realities and understand how to operate, but there's no point of trying to do trial and error. It's about partnering with global partners who have the subject matter expertise. As Mara, one of our recent ventures is a case study of that, which is Atlas Mara, which is my partnership with Bob Diamond. And Bob's global financial services experience, his relevant experience in Africa through Barclays and ABSA, and his sheer passion for Africa, and Mara's deep understanding of the market, being a recipient of financial services, we founded Atlas Mara, which is our vision in that is to become the leading financial services institution on the continent. And by leading, we don't mean the biggest, but we mean the best. And I think it's absolutely achievable in a practical way. And I think like that, GE is doing the right thing. And having thoughtful investors such as Mark from ADIC and looking at it in a way where they understand this, that there's no plug and play. And to Jay's point earlier, I think being based out of South Africa does not make you African, right? I think we have to be clear with that. And being based out of South Africa, unfortunately, doesn't give you deep insight and coverage in Southern Africa either. I think we have to be very practical that every single one of our countries is different. Regional integration is playing a huge role. The East African community, in my opinion, is probably the best example of that because it's the smallest and it's been the quickest and most effective in doing so. But as a whole, still, every market is very unique and independent, and there are strengths and weaknesses to each market. So it's a matter of truly, truly being local in the real sense, but having that global input and trying to operate in that global manner. And I have seen transformation take place on the continent firsthand in a remarkable way. So we're definitely on the right track, but global and local is important.
Okay, so I'd like to go back to partnerships in just a minute. But President Kagame, I would like to hear, I think it is good for the group to hear, you mentioned the East African community and East Africa and some of the momentum there. Do you want to talk about some of the specific things that have been happening in the region to try to advance cooperation?
Before I do that, let me add to what Ashish has just said. I think it's very important that we have systems to deliver information as well, correct information. I think people need to understand and know Africa the way it is. Because, of course, Africa is not short of bad stories that travel faster than good stories. By the time you are thinking of doing something, you hear of a story in South Sudan, they are at war, then there is the Central African Republic, then there is another one. And, for somebody who has not taken time to say, let me first understand this, they will just dismiss the whole of Africa because of that. So it is important that we invest also in giving correct information to people, to the rest of the world, to make informed decisions about how and where they would be making their investments. I just wanted to add to what Ashish was saying. But for the East African community, much progress has been made in the area of integration, which was really the key. And we have had 4 stages. We are looking at this integration. One is having an East Africa of these 5 countries I mentioned, having a customs union. If you are entering this geographical space, you are treated as if you are just entering one country. And that is already working. It's just to the level of integration we wanted to achieve, we have already achieved that. The second is making sure that this is a common market. This provides a common market. Therefore, the practices are the same and complement one another across the 5 countries. We are now at a stage where we want to see if the whole geographical area cannot have one currency that is used across the board. Again, that has made good progress. In fact, the ultimate, however long it may take, is also to have a political federation. And what we have done to accelerate this, integration is at these 4 levels, but we're also looking at, as we move along, we're integrating our efforts for investments. For example, we look at, we have an infrastructure master plan in the region to do with railways, they're building pipelines and fiber optic cables that are being, from Dar es Salaam through Dar es Salaam or through Mombasa. The 5 countries are coming together in terms of the investments that have to be made so that every country benefits. I think with the progress that is continuing to be made, and we have agreed now, and this is going to help things move faster, that of 5 countries, if we can't move at the same pace together to deepen and broaden the integration, we should let 2, 3, or 4 to move if they are ready and agree, while the other one may also come at a time they think they will have resolved the problem that was blocking their movement forward. So East Africa is well and alive, and we want to see these investments and to the benefit of everyone. There is no question the investors benefit, the people of East Africa will benefit, and of Rwanda. We're already seeing good progress, and this area has a very vibrant economy.
So this speaks to, over this last year, we've done a series of corporate investor roundtables, and some of the biggest feedback that we heard specifically about Rwanda, but also about some of the smaller countries, is about market size and how that's an issue for investors. So Seth, I don't know if you want to expand on this, but I do think that getting in the head of the investors and thinking about where we are and where we need to go. I have some other questions on it, but if you start.
So, when we first started this initiative, it was a couple of years ago, and I would say very little interest. But every year in the last 2 years, and it's been a very, very short period of time, if you think about it, the interest has grown tremendously. And this education that we're doing, even as President Kagame is speaking, is sort of like inside information as to where the region is going, because you're not hearing it necessarily on the news. So from our perspective, the LiquidNet is a community. It's a network of 750 of the largest asset managers around the world. Milken is the greatest convener on earth, and they have lots of different investors and investment types. And to get this started, we need a whole range of types of investors. And we started off with just multinational companies, because multinational companies can make that investment in a region, but it's not just them alone. There's a whole ecosystem that they have to build around it, and Jay has great figures that he can talk about in terms of what does one GE job mean to the rest of the economy, which is fascinating. But as this whole thing has progressed, we've seen, through a wide range of investors, and that you need a lot of different types of investors, from multinational corporations to sovereign wealth funds, to private equity firms, to pension plans, and they all have different investment horizons. They all have different objectives. Some like to invest in debt, some like to invest in equity. But you put it all together, and you should be able to create opportunities for each type of investor. And this is still the very beginning stages. And one of the things that we're looking for are partners like Ashish that are operators on the ground, where we can create and package business opportunities to be able to bring that. There aren't ready-made types of investments to a large extent yet in this region, but we can manufacture those, we can build those, we can present them with financing packages to the different types of investors around the world, and that can help accelerate and ease the investment for some of these different types of investors. And ultimately, then you will have the private equity folks that will come in that can buy the businesses or enhance the businesses that are already on the ground. But I think that this is the way that we can accelerate the job creation and the GDP growth and the growth per capita, which is one of our main objectives here. Thanks, Seth.
So I'd like to go to Mark. 2 things. I mean, one, first I want to address, I think this room is filled with a diverse group of people, and I always say that the value of doing programming on emerging and frontier markets in LA at our conference is you're communicating with the world that doesn't go to the summit in Cape Town or in Nigeria or wherever else. So, so I would like you to speak to, just quickly, you know, I think you just have a different perspective as a global investor versus others, and I think a lot are now looking to you, you know, those that are, whether it's, you know, U.S., you know, pensions or things like that, because the fact is when you sit in the U.S., the headlines are the terror attacks in Nigeria right now. They're, you know, the list goes on, and so I think that those are the headlines that people see, unfortunately, and most, not just Africa, but from some of these other emerging regions.
So, you know, people always talk about a long-term perspective, which is crucial. We have a long-term perspective, but I think more importantly, you have to understand what kind of institution are you? Are you really able to manage an investment in Africa? If you are, then you should figure out what the right structure is and then put in a plan to do it over a 5-year period so that you're not kind of swept by the news flow. And if you're not, that's okay too, then you shouldn't do it. Then you should wait until they have an Africa ETF or Blackstone and Apollo go to Africa. At that point, the opportunities are not going to be that interesting, but they will still be interesting. So it's okay. But you have to have that kind of perspective. You know, finance, for better or for worse, is cyclical. You know, if you bought the NASDAQ in 2000, even though so many amazing things have happened in technology, you're still a herding puppy, right? Mm-hmm. If you bought the stock market in 2009, you know, you're a guru. But that's not the perspective you can take. You have to make that assumption. I think what Mike said, that you have to be a social scientist and say, is this continent developing? Is this continent where I want to be, and will things be happening over the next 20 years? If that's correct, then I want to have a plan in place, whether it's infrastructure, whether it's power plants, whether it's hospitals, whether it's whatever, and that's how I'm going to execute my plan. But you can't just walk in, buy something, you know, have a hunch, buy a bunch, and then 2 years later sell it. That's not the way it works.
So Jay, I'll go to you next. I don't want to jump too much, but I think this does link in so if you have those ideas in mind, then it becomes, is there the ecosystem that Seth was just talking about? So I know you've put a lot of efforts in, and we've, you know, talked a lot about how do you build the supply chain. Mm-hmm. The people in our audience, a lot of them are LPs that are in funds that are the mid, you know, on the boards of these mid-market companies, and you've mentioned that there's resistance to them coming into some of these markets with you, with even alongside GE as a partner.
Yeah, and I think it goes to what Mark said about appetite and outlook. When you either as an investor or as an operator, I think when you look at when the developed world looks at the developing world, they look at it differently than the developing world to the developing world. So a lot of the foreign direct investment that's been being put in place, a lot of the companies that are coming into Africa are South American, Indian, Chinese, Asian, Turkish, etc. It's not the Europeans, the US, because they look at it with all the stuff we just talked about, how they look at Africa. And as a result, to Mark's point, getting in early is when you have that disparity between, you know, bid-ask, if you will. Mm-hmm. And that's where you can do it. But on the other hand, you know, it's not going to be structured from a standpoint of being able to do it through equities or your typical investment vehicles. And the way to do that is really looking at it from somewhat on the private side, which is a lot of projects, et cetera. But to your point on supply chain, it's the same thing when we talk to suppliers. So one of the things we're doing in Nigeria is we're building a facility to assemble subsea Christmas trees, which are the equipment that goes down to the ocean floor to basically pull the oil up. And we're going to do that in southeastern Nigeria. It's about a $250, $300 million facility for us. And one of the things we want to do is bring our suppliers along. So we've held supplier fairs all over the world, talking to our existing suppliers as well as talking to potentially new suppliers, and more importantly, marrying them up with African local entrepreneurs and companies that may be able to, where they can work together. And we still see a lot of, even when we sit there with an investment vehicle, which we call a supplier development fund, which we then guarantee the offtake once they qualify to be our supplier, and then be able to take that and finance their operations because they do have an offtake. You know, we still have a lot of hesitance, and it's again wrapped around all the perception and the views of Africa in total, rather than taking a look at specific how you can do business. So I think it's going to be a long-term play, but it's one that I think, you know, you have to have the patience and the wherewithal and persistence to continue to do that. Because what's going to happen is we're going to end up, and this has happened in South Africa where we assemble locomotives. We've got about 50% of the locomotive that we sell out of South Africa is all South African technology and equipment. And, you know, we have developed South African suppliers and their companies, and they're going to build out, and the same thing will happen in Nigeria. We're going to do it in Angola. And so as we build these supply chains out, in every head of state that we meet, that's what they talk about, is building out a supply chain, because we can take all of GE's 300 and some odd thousand employees, and it doesn't make a dent in the employment issue in Africa. But it does if, to what Seth said, you know, our supply chain everywhere in the world, one GE job creates typically 8 jobs in the supply chain. In Africa, we may be at 1-to-1 at this point, it may probably less. And so we need to build that up. And so if you get that multiplicative effect, then you can really make a difference.
So Ashish, do you want to comment on this?
Sure. I mean, I think to both those points, to build on both those points, I think the investment vehicle really does matter, right? In my opinion, today, Africa lacks a lot of businesses that can be scaled up in a real sense. And therefore, in my personal opinion, I don't think private equity is the right model. When we were even founding Atlas Mara.
Not today.
Not today, exactly. In 5 to 7 years, I think it's going to be fantastic. But today, it's about creating business. When we were founding Atlas Mara, our whole thought process was, how do we create a structure which enables to have permanent capital, which is liquid, which gives investors that comfort? And we were oversubscribed in our raise that we did, and we expected that, you know, not so much capital will come from the US, even though there's a lot of excitement. But to President Kagame's point, there's lack of data and understanding in the markets in terms of, you know, bad news travels faster than good news, unfortunately, and we're generalized as a continent in the negative sense, unfortunately, still. So therefore, we expected that, but because this was a evergreen capital kind of structure, it was listed on the main board of the London Stock Exchange, we were oversubscribed, and the majority of our capital came from the US. And we were able to, you know, attract some of the smartest investors globally, such as Scott Minerd from Guggenheim, et cetera, that really understood it and wanted to come in. There's a lot of excitement to come into Africa, but this is smart capital. I mean, they understand it, they get it. They don't understand Africa deeply, but they understand what's going to work and what isn't, right? So I think it's a matter of providing a platform that really is relevant today. And to Seth's point, down the line, private equity will be fantastic, because then you've got enough of these businesses that you can truly scale up. But today, it's really about creating the right types of structures, and the global, local, and the right type of vehicle.
I mean, this definitely has been the trend that we've seen, even in the last year. I can tell you that when we would have visitors coming in from, you know, other countries, from some emerging and frontier regions, you know, people would say, I don't know if I can fit those meetings in my schedule. This year we've literally been bombarded for all of our international guests, people want to meet with them. They want to know what Mark knows. They want to, to talk to Jay, and obviously President Kagame and Ashish, they want to talk to you too, Seth.
Thank you.
But no, they want to hear what people know.
My mom loves me.
Exactly. Well, so I'd like to segue from that. I think we are talking about. We had a session yesterday, and we have another in just a little bit, as we continue to look at infrastructure finance and what are vehicles and where the opportunity is going to be for investors to come in on that. Because I think the conversation has changed somewhat from why to how, and how do you make these investments. And I think, Mark, you've spoken about this a little bit. Certainly, Ashish, you referred to this, and we're thinking about it more and more. I would like to move a little bit to sectors that are of most interest, and I think that one of them, and I'll speak very broadly about this, is, this goes almost to the beginning of the conversation of why now. And, I've had conversations with Mike Milken and with Seth, and like the roof almost blows off as they think, they talk about, money used to sit in a vault, and now you can, send your entire net worth with pushing one button. But how are we not accessing and moving capital? So technology in that sense, if we've never had the capability. So Seth, do you want to talk for a second about LiquidNet's platform and what you built and why that's such an opportunity to be able to drive capital into different areas and opportunities?
Yeah, so LiquidNet is a global institutional trading and investment network. So we've created a massively efficient distribution platform to investors around the world. And if you think about capital generally is incredibly local, very, very, very regional. And in today's world, you've got a tremendous amount of capital, as we've seen, that is yielding very little return. And you've got lots of places where they need a tremendous amount of capital that is willing to pay a higher return. So you need a platform today that sort of uncouples the big bank's grip on whether you have a healthy lending environment or not, and have the ability to move capital around the globe seamlessly. So we want to be able to, and we built this, and everything that we do is powered by technology, because quite frankly, in this industry, you don't need a lot of technology to be completely disruptive. So we build that technology, and we have the ability now to create and be able to broadcast out investment concepts, ideas, whether it's and soon to be either debt or equity or different types of projects to investors all over the globe. This is a platform that we are opening up to all of the Milken custom members and participants, because obviously, I think that there's a tremendous amount of opportunities that are going to come around from a variety of areas and locations and places around the world. To be on this platform, it's great for the investors. It's certainly great for the ones who want to put these projects together. And the faster that we can get this out to the rest of the investment universe, I think the better it is for the investors and the investments on the ground.
Thank you. Well, so now I'd like to move to the potential of technology more broadly in these markets, because I think the impact of that is, can be, if you go to, I think it's slide 9, you can just see the incredible, jump that's been in terms of mobile penetration. President Kagame is the co-chair of the UN Broadband Commission. We had a meeting earlier about financing broadband infrastructure, because we hear from everyone there's just such an opportunity that comes from opportunities to start businesses and change the economies. And people always ask me, like, what do you hear about the most when you're on the ground? I joke around that the term I hear the most is leapfrog, because that's the opportunity, is for this tremendous opportunity to leapfrog because of technology coming in. So President Kagame, why don't you speak a little bit about the things that you're doing, but also the potential, not just in Rwanda, but in other developing countries, as you're able to bring in technology and some of the things you've done to get it to take root quickly.
Right, thank you. Uniquely for Rwanda, in our vision, when we have put at the forefront education and trying to create a knowledge-based economy, that's where the whole idea started, to say we need to invest in relevant infrastructure, but mainly focusing on information and communication technologies, as well as other technologies, and especially in schools, even science and technology, and so on and so forth. But today we find, for example, we have started from education at lower levels, even in the primary school. We have partnerships with one group called One Laptop Per Child. They were providing that. It's a professor at MIT who brought the idea to us, and we have been giving laptops, for example. They are low cost to primary school kids. We want to enable each one to have that. But we also invested in the general infrastructure of ICT, we now provide broadband across the country. In fact, we have laid cable across of about 4,000 kilometers across the country. Fortunately, on one hand, our country is a bit small. It is easy to reach all corners. Well, although it is mountainous, of course, it makes it a little bit more expensive. But we have done that. In fact, now Kigali is served by 4G LTE. We have had a partnership with a South Korean company, Korea Telecom, to establish and manage this with our own people. Now, but the impact is huge because you see across the board, first of all, we have also concentrated on making sure that these technologies are affordable, are accessible. That's always at the back of our mind as we deploy them. And we have found that even ordinary people, you just give basic knowledge and the basic tools, and they are always eager and to use them, and they use them and to their benefit. We see benefit across the board in Rwanda. You go to rural areas, you find herdsmen and local farmers, and with mobile telephones, they are able to access information on the market about weather. And we have even used the mobile technology to serve in the health sector, where it helps with the health workers as well as, for example, patients. The level of communication that takes place and people getting advice, the necessary advice they require, and feedback with the people they have to work with. It's very exciting in its real sense, but also the benefits are very visible, and that's what we have been concentrating on. So we have been seeking more investments in the areas of expanding use of technology, here as the basis for innovation and also the input it has on the level of developing entrepreneurship.
Okay. Ashish, did you want to comment on this? Or I think it'd be good if, because we do have a lot of investors in the audience, I think it would be good to go a little bit on this industry, or if there are others that you're particularly keen on.
I think, look, I mean, as a continent, we've had the fact that we don't have legacy systems. We've had the true ability to leapfrog in the real sense, right? The fact that we have taken mobile phone penetration so high, but I think this is the beginning for us, right? I think, in simplistic terms, to kind of articulate it, when you look at, the Western world has gone from 1, 2, 3, 4, 5 in terms of development steps, and they're now going towards number 6. As Africa, we're probably going from 2 to 3, but we don't need to go to 3. We can cut out the steps of 3, 4, and 5 and start looking at 6 immediately. And I think that's exactly what we're going through as a continent. And why can't we be innovative in the sense that why can't we create the next Facebook or the Google, etc.? And I think that's possible. And I think we're going to demonstrate that and show that is possible. And other sectors, obviously, financial services I've touched on, 7 to 8% banking penetration. Mobile money has been an amazing revolution on our continent. But now we need this to be financial institution-led, not telecom operator-led. We need it to be mobile banking, not mobile money. That revolution is going to take place now, which we hope to participate in. Agriculture is very important, the fact that we have so much naturally rain-fed arable land on the continent. Infrastructure from power, which Jay is very active in, but also real estate activity. So, I mean, all of this is really, everything is a real opportunity.
And everything is, it's really so basic. You've got subsistence farming primarily in Rwanda and throughout Africa. If you just introduce some super seeds, for instance, or some irrigation, there's no irrigation that really goes on, and you can increase the yield at least 5 times just by doing that, right? Or, just creating a business model that is mobile medicine, right? Because you have a dearth of doctors, but with mobile, this is just enabling technology where huge businesses can be created that would have substantial impact and should have tremendous opportunity.
This is the aspect where the market drives the technology rather than the technology driving the market. Yes. All right. So as Seth said, the lack of doctors in rural areas is huge. So we're able to work. We have a handheld ultrasound that we can train, which we've done, We've trained midwives that they can then triage a pregnant woman and tell her that she needs to go to a birthing center or a hospital or whatever, or we can send those images through the mobile phones back to a doctor that really can read it and make a call. That's one. In Kenya, in the slums of Kibera, there is an ability through mobile money, M-Pesa, to buy power for an hour. Yes. And as soon as you end up, using up that amount, you can re-up if you want. The ability to rebuild the grids in Africa with smart grid systems on a prepaid basis that can be paid and handled through technology is absolutely huge. As President Kagame said, 4G, that's pretty much almost not everywhere in Africa, but in many of the countries that we operate in. So there's a tremendous amount of ability, and the reason is because it's the way the market thinks. And it's not going to be, I always get a kick when I come back and people are talking about, Square, where you can go to Starbucks and push a phone, And I'm going, Kenya has been doing mobile money and transferring it through a $10 Nokia phone, for the last 5 years. $20 billion, 19+ billion dollars of mobile money has been transacted. 35% of the GDP of Kenya is transacted mobily. Name anywhere else in the U.S., it's like 0.001.
Yeah, I said the other day that I had just come from, going to the ATM to deposit a check. But when you're driving around in Africa, you'll see a shack and it has an M-Pesa Safaricom sign. You don't see Coca-Cola signs everywhere anymore. You see those.
So and again, that's the market, and that got started because people would come to the Nairobi, and then they would want to send money home, and there was no way to send money home safely other than giving it to the guy next to them to take it up in the bus, or they get robbed or whatever. So they devise this. So that's where I think, again, being on the ground, understand the tremendous amount of innovation that's occurring with the mobile infrastructure is amazing, and it's all small entrepreneurs where there isn't a venture capital capability like there is here, or there's an IPO market. All that isn't there, but there's a lot of great ideas being developed.
So we're almost out of our time, but Mark, I want to let you go and then see if there's any final words.
No, I was just going to echo the same point about that, banking will be redefined in Africa.
Yeah.
And this is the point, in terms of being able to buy things with your phone, and the fact that people in the States don't have that experience.
Right. So President Kagame, do you have any final thoughts for us as we think about encouraging all of these, our investors to think about these markets and
Yes, I would quickly say that, first of all, I think as investors we have concerns and they are very clear, and maybe there are issues to address on our part. I just wanted to assure them that government and policy makers are really thinking about resolving most of these bottlenecks. So I think it's not that people are not listening or that are indifferent to some of the concerns. We try our best to make sure that we address these concerns so that investments we are looking for can flow to Africa.
Yeah, I remember sort of linking this whole conversation. I remember in a meeting that you were leading in Kigali that President Kenyatta said, everyone's very worried about corruption, but once you're going online and filing for a business online or doing a transaction over, your phone or with a debit card or whatever system you're using, there isn't cash that's it's all being tracked. So there's a real opportunity there. Well, I want to thank you all for participating. Hope you all have a wonderful day.